Do you have money in a certificate of deposit? Make your CD work harder for you. You can keep your CD and use it as collateral for a line of credit. For example, if you have a $100,000 CD paying 2% interest, your bank will probably charge you 2% to use your CD as collateral for a line of credit. Loan your funds to SEL-Dixie Capital Investment Group to receive 12% APR, minus the 2% line of credit fee, netting you 10% on your current CD without even having to cash it in. You can keep your CD, just make it work harder. We can even recommend a local bank that can do this for you. Early withdrawal of your certificate of deposit. This slide demonstrates that by paying the early withdrawal penalty for a CD, you would still earn more by using those same funds for private mortgage lending. Let's review the current example. On a $100,000 CD earning only 2% interest per year, your annual interest earnings would be only $2,000. Loaning $100,000 to us at 12% per year, your annual interest earnings would be $12,000. If you decided to cash in your $100,000 CD and paid your banks $2,000 6-month early withdrawal penalty and then received a 12% yield from us, you would still make $8,000 more, even with paying the penalty. Life is just too short for low interest rates. Your biggest concern? We'll assume it's the protection of principal, right? Well, you can put your mind at ease, because our number one rule is money is not borrowed with higher than a 70% loan-to-value ratio of the after-repair value. This provides you with additional security because we do not over-leverage the property. Remember, just before the banking collapse, some lenders were allowing people to borrow up to 125% of their home's value. Remember that? This is called over-leveraging and creates negative equity. I think we all know how that turned out. With our program, there's always plenty of equity above your loan. For easy math, this slide uses an example of a house that appraises at $100,000 once the renovations have been completed. This is known as the after-repair value, or ARV. We will never borrow more than $70,000 to complete this project, meaning that we will never exceed a 70% loan-to-value ratio, known as LTV. The reason why we don't have to exceed 70% LTV is because we're able to purchase houses so far below market value, which leads to the next question. How can we buy houses so far below market value? Well, our specialty is distressed properties that typically need to be renovated or need some TLC. We know where to look, what to buy, what not to buy, and the best way to renovate. Our biggest asset for buying houses at rock-bottom prices is our ability to close quickly and to pay cash to the seller. This puts us at an advantage. It's nice to know that as a result of what we do, we improve neighborhoods and actually contribute to rebuilding the local economy. So where do we buy houses? From private individuals prior to foreclosure. These are known as short sales. Buying from other investors known as wholesalers. We know several in the area. Tax sales or tax auctions. Networking with other realtors. And our number one source, buying foreclosed houses, known as REOs, straight from the banks. A huge advantage for SEL-Dixie Capital Investment Group is that Anthony Maritoli, one of SEL-Dixie's owners, is also a licensed real estate broker who has direct access to bank REO listings and is a certified distressed property expert who major banks actually rely on for REO pricing. This ensures our availability and accuracy in finding the best real estate deals in the area. Our competitive advantage is our speed in being able to purchase property and our knowledge of creative real estate techniques in order to maximize profits. Let's talk a little bit about our company. The unusual name of SEL-Dixie Capital Investment Group comes from being the joint venture of the owners of Selfast Realty and Dixie Investment Properties. We are a Florida corporation. Tony Maratoli is the manager of operations, and John Schultes is the manager of administration. We buy and sell real estate for profit, and we short-term hold properties. We are professional and courteous, and we intend to grow with our private lenders. Prior to borrowing funds from private mortgage lenders, we're required by law to provide a disclosure statement, known as a prospectus, about our company and our business model, as well as a detailed description of our investment program. This last case study is a potential opportunity that's available right now for a private mortgage lender. We're sharing this proprietary information with you so you can see how we do business. It's an undisclosed property in a nice neighborhood in Palm Harbor, Florida. It's a 3-bedroom, 2-bath, 2,200 square foot pool home that is a vacant bank-owned foreclosure. The house is currently listed at $176,000 and has an after-repair value of $220,000, although we're not going to pay $176,000 for it. To get top dollar in the retail market, we will renovate the kitchen, add beautiful stainless steel appliances, classy granite countertops, and new flooring. In the living room, we'll strip the damaged wallpaper, add paint, refurbish the flooring, and remove the entrance columns to give it a wider, more open feel. It's all about the wow factor. The master bathroom and bedroom are both in good shape, but are a complete fashion disaster. Our renovation team will use natural colors, textures, and styles to make this house look absolutely drop-dead gorgeous for the end buyer. Ah, yes, the pool. We know it looks a little bit more like a swamp than a pool right now, but that's okay, because in our business where there is damage, there's profit opportunity. The pool will be drained, sanitized, treated, and refilled with sparkling clear water, and the screen damage to the lanai will also be repaired. The house needs $14,800 in renovations. The list price is $176,000, and our target purchase price is $135,000. The after-repair value is $220,000. The maximum loan amount we would borrow from a private mortgage lender is $154,000 to cover acquisition costs, rehab costs, and carrying costs. Our expected sales net is $33,700 after repair costs and 7.5% sales commission. The private mortgage loan of $154,000 at 12% interest for the 3-month minimum would pay $4,620, while the 6-month loan will pay $9,240. Does this sound interesting to you?
Files done.
By now, you know how this program works and how you can start earning 12% APR. And you have 2 options. Option 1, do nothing, because this isn't for you. If that's the case, can you give us referrals of people that might be interested? Or Option 2, set up a one-on-one meeting with us to discuss more details about our program or find out how you can get started right away. We hope you decide to become a private mortgage lender and decide to do business with SEL-Dixie Capital Investment Group. Thank you for your time.